Hello, friends. Today we're taking a look at Costco Wholesale Corporation, ticker symbol COST. Costco just reported and had a big drop after the report. We'll be looking at the earnings report and what happened over there, what are some of the current news, and then we'll jump into the last 10 years of um, fundamentals, and then we'll try to find a fair value for Costco. So, welcome to Money Talks with Martin Reyes, where we learn to take care of our money and find great companies at great prices. Costco, like I mentioned, dropped almost 8%, actually a little bit past 8% on after earnings. In the last 5 days is down um, almost 4%. In the last month is flat. Year to date is up almost 11%. The last year up almost 49%. And in the last 5 years, an amazing 233% up. So, like I said, they reported not too long ago on March 3rd and March 7th, sorry. And then analysts are still see it as a buy, as at least they haven't updated this information in stock analysis. And the price target that they were looking at for the next 12 months is at $690, which will be 5% down. We're gonna try to find a fair price for Costco. Just a disclaimer: I own Costco. I bought it not too long ago, so I am negative on it. I think I'm about 5% down, but I'm not worried about it. I may just actually buy a little bit more. So let's look and see what you guys think and what I think, and we'll go through that. When it comes to PE, it's right now at 63, almost 64 times earnings. However, the forward PE is at 44, 44 and a half. They do pay $4.08 annual dividend. Well, it's not annual, it's quarterly, but together in the whole year is $4.08, which it is a little bit above 0.5%. Looking at the earnings, they beat on normalized EPS and they also beat on GAAP, but they miss in revenue. They miss by almost $700 million. And free cash flow was also a little bit off. Part of the reason is they're investing on new, they call it warehouses, but it's just a store from my perspective. And also, part of the reason also it went down, some of the comments that I read is because the CFO mentioned that they are not looking to raise the membership. And actually, they have been cutting prices in some of the different articles that they're selling. So, that created a little bit of an issue, I think, for some investors, especially short-term investors. When it comes to Costco, they will be announcing again on May 30th, and there are 22 revisions, and one of them is down. 21 are up. Looking at what people are they're expecting, not people, analysts, sorry. They continue to see revenue growing slowly, or in a regular way. Actually, slowing down a little bit, and then they're looking at the earnings per share to continue to grow in a regular way. So maybe for next year, almost close to $16 a share, and then by 2025, an estimated $17.23 per share. So I hope that you're liking what you are for the video. Even though, to be honest with you, I feel a little bit all over the place. Sorry about that. I'm gonna start concentrating a little bit more. So please leave your comments down there. Tell me to wake up and pay a little bit more attention. Subscribe. I'm trying to get to 1,000 subscribers, and I really appreciate all of you guys that have been subscribing. Leave a comment and a like, and that will help grow this channel. I really appreciate that. And let me know if you like my style of just having a conversation with you instead of being a little more elaborate with all the video and stuff like that. When it comes to revenue in the last 10 years, revenue has been growing really nice. When I'm analyzing a company, I like to see companies growing all different charts to be going up in a regular way. I don't like jumping up and down. In the last 10 years is been growing at 8%, the revenue, and in the last 5 years it had accelerated to almost 10%. Gross margins are really low, but this is normal for this kind of business. Gross margins are close to 13% average in the last 5 years. When it comes to earnings per share, has been growing pretty smoothly and regular in the last 10 years at 12.18%, and in the last 5 years, 12.17%. So pretty consistent, and this is one of the reasons why a lot of people like Costco, because they're very consistent. However, profit margins are really small at 2.5%. So this is kind of normal for this kind of business, but also it is very risky because there's not too much margins there, which means that if the cost of things grow, that can really affect the margins. When it comes to free cash flow, it's a little irregular. This is something that I would like it to be a little more regular. But this is normal with a lot of the buildings that they're doing. I think they just opened 6 new warehouses, and some of those in China. So they in the earnings report, I encourage you to listen to it. They were talking about how many people. It was the average, I think, is like 50,000 people. Don't quote me on that, but it's like 4 times what a normal warehouse signups they have in one of the new warehouses over there in China. So that was great. Last 5 years is at 21% growth for free cash flow. In the last 10 years, almost 16%. Free cash flow margins, once again, pretty small at 2.74%. And the free cash flow yield, pretty nice at 270. That I think that's pretty nice for this kind of business. Book value has been growing the last 7 years at 7.7%, which is not amazing. It's okay. And in the last 5 years at 11%, which is okay. Return on invested capital is return on investment average of the last 5 years is 27%. I like it over 25, but a minimal of 15. Return on invested capital, same numbers, but it's at 17.7. And return on asset, I like it above 10%, minimal of 5. We're looking at 8.6, so that's okay. Dividend, they have been growing it pretty nice. These 3 big jumps, those are special dividends that they have paid. So in the last 5 years, it have grown at 10%, and in the last 10 years at 11.5%. So that is a really nice growth of the dividend. Payout, it's a healthy 27.8%. They have grown their long-term debt, especially in the last 5 years, almost 10%. But they could pay all their long-term debt in 1.5 years with their average free cash flow. So it's a very healthy leverage, at least from the numbers that I tend to look. I don't think they're over leverage, and yeah, they're great. Now, when it comes to shares have been growing in the last 5 years. Not much, but you know, it's it's always it would be awesome if they were, instead of paying the dividend. I know some people are just gonna yell at me right now, but instead of paying the dividend, honestly, they should just be buying some of the shares back, because whenever we pay a dividend, we pay taxes on that. Whenever they buy their own shares, they give us we grow the ownership on the company, and we don't pay taxes on that. So as a summary, you can see it over here. They have some mixed numbers. Earnings are growing pretty good. Revenue are a little they're good. So blue means good. Green means above average. Above um, what yeah, above average. 15 is excellent. I mean, this golden. So anything you see golden, and then these are below average. So they're doing pretty good. I like what they're doing. So I think it's time for us to just jump in and try to figure out what a fair value is for Costco. But before we do that, let me just give you a disclaimer. I am just a YouTuber. I'm not your financial advisor. This is just for educational purposes. Do your own research, and this not I'm not giving you financial advice on any kind of way. So with that in uh, with that in mind, let's just jump in. The historical multiple valuations, whenever we take all the different averages and multiply by the multiples, then we have, this is what the market has been willing to pay. So if we were to just take the multiples that the market has been wanting to have been willing to pay in the last 5 years, we'll be looking at paying close to $582 for a share of Costco. So Costco has been growing very fast. A lot of the numbers, as we saw, growing pretty nice. So I will, for the rest of the video, I will be focusing more on this trailing 12 months as a number to be evaluating this company. I like to use averages only whenever there is a little more cyclicality to the company. I was using average also after COVID, just because so many companies during COVID had really crazy numbers. So I just that's part of the reason why I always use averages there. When we look at the revenue-based valuation, whenever we take the revenue, we grow it at the historical 5-year average of 9.98%. We look at the profit margins and paying a PE of 40. We are looking, and then we discounted back, a fair value for Costco today should be close to $466. When it comes to the discounted earnings valuation, that is just growing the earnings all for 5 years and then discounted it back at 15%. My discount rate always is 15%. That gives us a $494 of fair value. Payback time, if we were to just receive the free cash flow for the next 8 years, growing at 11%, I think that is a reasonable free cash flow growth. We're looking at $562 there as a fair value. If we use the discounted free cash flow using the same growth rate, but then discounted it back, we're looking at a free cash flow discounted fair price of $722. Looking at the owner's earnings valuation, if we just take the owner's earnings and apply a 40 PE, we are looking at $777 as a fair value. Whenever we put everything together, the average of all those numbers, whether we add the trailing 12 and the 5-year average, is $552 529, sorry. But I will be more focusing on the trailing 12 months at 600. Right now, it's a $725. It is overpriced. And you may ask, Martin, why did you pay 700 and something dollars for the stock when you can see clearly that the fair value is $600? Well, my friends, this is what I call this is when I'm going to be honest with you guys. I wanted Costco, so I bought Costco, and I'm paying for it by going down, and I just got a little disorganized. I just wanted to own it. I don't think it's gonna get down to $600. It's gonna be hard for me. I've seen other people. I mean, if we put a 10 or a 15% margin of safety, I've seen other YouTubers look at Costco to buy it somewhere around 510. I don't think it's gonna get there. Honestly, I'm just I don't know what to say. I just really think that the growth of Costco is it's going to be consistent. This is a great time to buy from my perspective, and I'm looking to maybe add more. So yeah, this is one of those stocks that I'm going to be honest with you. I did not follow my own rules of investing, and I think that I am not making a mistake. Let me know what you think. I would love to hear what you think. Have you ever like bought a company just because you like it, and even though it's not in the right price that your calculations tell you, I feel comfortable buying it, even though it's not at the price that my sheet tells me to buy. And part of the reason is because I'm willing to get a smaller margin of safety, and with Costco, they are growing really nice numbers. So yeah, that's my reasoning. If you would like to play around with the discounted with the sheet that I just showed you, you can buy it at Buy Me a Coffee. Link is down there. I would love to hear from you. Have you bought Costco? What did I go wrong? What did I go right? Is there anything that I'm missing? And I hope that you enjoy the video, and I hope to see you in the next video. Bye.